Okay, so I've got 5 things I want to cover this week during my update. First of all, why you need to attend my upcoming webinar on appraisals. Why did interest rates improve this week? How to respond to are we in a housing price bubble? Seller price shock. Is now a good time to sell? And finally, you don't need that appraisal contingency as often as you think. So let's start at the top. You need to come to my appraisal webinar. It is going to be from 12:30 to 1:30 Pacific time this Thursday, the 24th. We're going to be having my staff appraiser there talking everything you need to know about appraisals, including a Q&A so you can ask questions about appraisals and get the answers that you've always wanted. So sign up. The link is below. Definitely worth your time. Why did interest rates improve this week? Well, here's what's going on. There's a lot of concern with all of the issues that are happening between Russia and Ukraine. And it's kind of oversimplified, but I'll tell you that it has a lot to do with the stock market and the risk in the stock market. And when there is volatility, especially when it comes to war, the concern is that the stock market is not going to fare well. People pull money out of the stock market and they buy lower risk investments. Bonds and mortgage bonds represent that lower risk investment. And the more buyers there are, the more people that want to own mortgage bonds, the less interest we have to charge in order to attract buyers. Oversimplified, but the bottom line is we're seeing some impact of the war mongering, the war fears, the war concerns that are coming up. If that develops into something further, we're likely to see downward pressure on interest rates. I don't think it's going to be a significant change, but what it definitely is doing is slowing the significant upward movement we've seen due to inflation. So we're going to be kind of at an unknown for the next little bit until we figure out, are we going to be headed into a war or are we not? Is inflation going to win by pushing rates up, or is we're going to keep rates down some? Um, I got a lot of people asking me, hey, John, are we in a housing price bubble? The simplest way to answer that question is to look at inventory. When you look back at 2007, when we had the last significant bubble, there were 3.8 million homes listed for sale. Last week, the numbers came out that there were like 800,000 homes listed for sale across the United States. That is 3 million less homes listed for sale. So, what we're seeing right now is we're seeing supply and demand. There just isn't enough supply, and there is a whole bunch of demand, and that has to do with household formations. You've been hearing me talk about household formations. You've got the 20 and 30 somethings that didn't want to go out and buy a home, didn't want to move out of mom and dad's basement, and they didn't form a household. Now they're moving out. Maybe they rent, but that puts pressure on rents. Pressure on rents puts those renters that are currently renting to say, well, darn, if I'm going to pay this much extra in rent, I might as well go buy a home. And that by default puts pressure on house prices to go up. We're continuing to see demand being strong and supply being low. Even if supply picks up, even if a lot more houses go on the market, we're not going to see a crash because we've still got a bunch of demand, people who want to buy homes, people who need to buy homes. At the worst case, if we see any kind of an uptick in supply, we're going to see a leveling off of housing prices. I don't see that happening this year. I think it's going to be a crazy year this year. So, 2 things I want to talk about, my last 2 topics. Seller price shock. Is now a good time to sell? That's what we're dealing with. Okay, we're dealing with sellers right now that are being shocked by what they're going to pay for the next house, or the fact that they're not going to save any money by downsizing. Normal part of the cycle. You've got people who, especially over the last 2 years, have kind of been concerned about making a change to their housing situation because of all the economic challenges and just environmental challenges with COVID. And now they're saying, hey, maybe I'd like to downsize. That's pretty common as we head through a cycle like this, that people want to downsize to a smaller home, but they want a smaller home so they have a smaller payments. The problem is that they currently have an interest rate of 2.75% on that higher priced home. They downsize to a smaller home, they might not save any money in property taxes because their property taxes were locked in at a lower price. Depending upon their age, they might be able to transfer their property tax basis. That still isn't saving them money on property taxes. And on top of that, their interest rate is going up significantly. So any decrease in loan amount because they're buying a smaller home might get eaten up by an increase in interest rate that makes the monthly payment even. What you have to find is the sellers that want to make a move for personal reasons as much or more than for financial reasons. Because if they're moving simply to save money, now's not the environment to do it. If they're moving because, hey, I want less upkeep, I want a smaller home, I don't want to have stairs, I'm in a position where I need to be in a single story home. That's the kind of seller that is going to be perfect for a move in this market. But we're going to continue to have inventory challenges because sellers are getting a shock at how much extra it's going to cost them to buy a bigger home or how little they're going to save by downsizing. And so you really do have to be educating your sellers early, and you really have to be doing a lot of prospecting. You've got to get a lot of people who are thinking about buying and selling because some of them just aren't ready to do it given market conditions. Finally, I want to talk about appraisal contingencies. What I said I was going to cover is you don't need that appraisal contingency as often as you think. This is really misunderstood, and I'm talking to more and more of my buyers about it. So I'm going to give you kind of a ballpark idea in your mind. If a buyer is putting at least 20 to 25% down payment, you could theoretically offer that same amount, 20 to 25% over the list price. And even if the property only appraised at the list price, you still can complete the transaction with very little extra money out of their pocket. Not going to go into a whole bunch of detail on this. Call me and I can set up a time to talk through it with you one-on-one. But the bottom line is that they could buy a $500,000 listed home. They could, if they're putting 25% down, so they're basically planning on putting, let's use 20% as a number for simpler math. So they're on $500,000 home, $100,000 down payment, but they've decided they want to offer 20% over that. So now they're buying the house for $600,000. That house could appraise for 500,000 and they can still qualify only putting their 20% down on the purchase. Now they're going to need a little bit more cash out of pocket because they would be paying for appraisal gap insurance, which is essentially a one-time mortgage insurance fee, but they're not coming up with $100,000 extra out of pocket. They might be coming up with $5,000 or $10,000 extra out of pocket, and that's really good compared with them being about $100,000 light on appraisal. In other words, nobody expects that value to come in $100,000 light. So if you've got a buyer that is concerned about appraised value and concerned about offering over asking price and it not appraising, but they're putting a decent amount of down payment, you need to have them talk to me because it is highly likely that they can go in without any appraisal contingency. Their worst case scenario is a little bit more cash out of pocket, but not a significant amount. But their best case scenario is to get their offer accepted before interest rates continue their upward trend, and they end up paying a whole lot higher in purchase price and a whole lot higher monthly payment because of that higher interest rate. Give me a call if you have questions about this or anything else, and I hope you have a wonderful day. Talk to you soon. Bye-bye.